This is Rudkowski of WeAreChange.org, joined here by the one and only Max Keiser, good friend of mine. We haven't talked in a while, Max. Yeah, it's definitely been a while. But last time we talked about kind of the financial system within the United States. And with the debt now reaching $20 trillion and so many bubbles out there, whether it's a derivative bubble, student loan bubble, real estate bubble, financially, you've been covering this for a very long time. Since the last time we talked, what kind of economic troubles or bubbles are you looking at as a major problem for the United States? Because as we've been talking for a long time now, it's only a matter of time since the debt and all the bubbles catch up to each other.
I would say the number one bubble is the bond bubble, and let me explain a little bit what I'm talking about there. So the sovereign bond market, whether it's in the United States or in Britain, is trading at multi-hundred-year highs. So in America, we haven't seen bonds trade at this high level in 240 years. In Great Britain, they have not seen bonds trade at these levels in over 300 years. In other words, the inverse of this bond price bubble is interest rates. Interest rates are at historic lows. Why are interest rates at historic lows? Because the central banks are in the business of keeping their brethren banks from having to declare insolvency by buying from them all the junk on their balance sheet. So whenever these banks accumulate some nasty asset, they then sell it to the central bank and they store it for them, and that's how you get to that $4.5 trillion worth of assets on the Federal Reserve balance sheet. And Janet Yellen will go on TV and she'll say, you know, we need to unwind these assets. We're going to start selling these assets. But that's an impossibility because that would mean interest rates would start creeping up, and that means that all of that efforts to keep these banks from declaring insolvency would fail, and they'd have to start declaring that they are insolvent. All the major banks in the U.S., Deutsche Bank, major European banks, all the banks in the U.K., the big four, technically insolvent, so they must keep interest rates lower. And let me say this, Luke, what I think is happening, because many people say it's a bubble, it's got to burst, and it's only a matter of time. I think that there's an alternative avenue, an alternative path, and it goes like this. What we're seeing in the U.S. is effectively the entire stock market is being taken private. And what I mean by that is when you have a leveraged buyout on Wall Street, when one company buys another company using debt, you know, the way that works, they pledge the collateral of the company they're going to acquire as the collateral for the loan that they need to buy the company. They then buy the company, and once they own the company, they start selling off assets to pay back the loan that they used to acquire the company. That's a leveraged buyout. And this is easy in an environment like we have today where interest rates are near zero. So you can borrow billions and billions and billions of dollars, and your interest cost on that is almost nothing because the rate is near zero. And there's no regulatory deterrent to this. No one's stopping any of these deals from going through. In the media business, it's consolidated down to just 2 or 3 players. In the banking business, just a few players. In all verticals of American industry, it's all narrowed down to just 2 or 3 players from this process of consolidation, of being able to buy everybody out. And now we're at a point where the entire market is at threat of being taken private, and no publicly listed stocks of any consequence available at all. And see, that could be the end game. So in other words, instead of saying, oh, there's going to be a bond collapse, interest rates are going to spike, and there's going to be a huge coming back to normalization, not necessarily, not if all the assets held that are totally in the control of a very small minority of players are stretched to the point where they control effectively the entire board. The entire monopoly board is taken offline. And then you'll have that wealth and income gap will stretch to feudalism. You'll have feudal lords, and then you'll have serfs. And you already have the prison industrial complex is already paving the way for this. You already have the average American has less than $100 in savings. They're 1 paycheck away from insolvency. There's the healthcare costs are beyond the reach of just about everybody. Education costs are not commensurate with having a well-educated population. So all the pumps are being primed. That's what I see as the end game. So is it in a bubble? Yes. But could this alternative finale take hold of the most extreme form of wealth and income gap you can imagine, essentially medievalism? Is that in the cards? Is that possible? The trend would say yes. So unless there's a trend reversal, then we're heading toward lords and serfs.
You brought me exactly to my next question, because very few people, I think it's 1%, that control over 83% of all stocks on the publicly traded market. So we're seeing that control happening there. And I was going to say, and I have to bite my tongue on this, if there's one thing that we have to give up to kind of the banksters, the big Goldman Sachs, JP Morgan, Chase players out there, is that they are resilient. They are making up new rules. They're playing by their own game that they're making up on the fly, and they're getting away with so much. Even during the housing market crisis, people saw that a year before it was going to happen, but they were still able to hide that, postpone it for a year. Then when it hit and happened, they used it as an excuse to generate more revenue for themselves from the state and get bailouts for their mistakes when they were robbing everyone else pretty much blind. So I do think that there is a possible future in this kind of feudalism, because they're not playing by normal economic rules at all. And there's no way you could continue economically with so much debt and no debt creation. And I really kind of see the war industry as a big kind of transfer of wealth, especially within the Pentagon. If you look at taxes in the United States, over 80% of them go towards supposed defense spending. Do you see the military-industrial complex, or do you see the bankers more kind of responsible behind the scenes? Because it is war that is ultimately making the empire as strong as it is right now.
Sure, the war is the greatest business of all because you make the most profits. You drop a bomb that costs $50 million to make, you made the money selling that bomb, and now you blow up the bomb. So you got to sell another bomb. You know, there's two industries that make a lot of money: war and prisons. And that's where you see a lot of the activities of corporate America migrating into war and prisons, and then interest rate arbitrage or financialization games where they're just playing balance sheet games to rent seek and extract wealth from the system and leach money out of the system. And you know, this is an interesting point in the whole history of finance and markets, because in America, the point of the checks and balances that are part of the setup of the government, with houses of government, and the way that you also have the press set up as the fourth estate to be another check on power. And this is all meant to encourage competition. I'm totally free market competition proponent. But what you have now is a complete absence of competition. So without competition, there can be no organic GDP growth. Without actual growth, there can be no savings. And without savings, there's no capital. And without capital, there's no capitalism. So you can't have capitalism without capital. You can't have capital without a rate of interest that pays people to save money. There's no incentive to save money. There's only an incentive to commit fraud. So if there's no incentive to save money, then there's no capital. And without capital, there's no capitalism. So you have, unfortunately now, the situation where it's the survival of the most fraudulently inclined. It's a kakistocracy, which is ruled by the least capable of a society. It sounds like caca, which is, you know, the kids would say caca meaning shit, and that's the Greek. I believe it's a Greek. The preface goes back to the Greek meaning shit, and it's a shitocracy. It's a kakistocracy.
I couldn't agree with you more. The last kind of question I want to get into is, of course, Bitcoin and alternatives, because we've seen Bitcoin enrich a lot of people, but there's also a lot of worries with Google, Goldman Sachs, and other major players getting into the game. Do you think cryptocurrencies and encryption and all the new latest technological advancements are going to help deal with a lot of the problems that we're dealing with this kind of fake economic system where we have socialism for the super rich and capitalism for everybody else? Do you think cryptocurrency could be that, and do you think it could be possibly even taken over by the same powers that are destroying the economic system that we have now?
Well, there's two questions there. So the first question is, yes, I do think it's a solution, because you have people would then be in control of their own sovereignty, because you have wealth on the private key that is unavailable to any regulator, any government. You know, it's your wealth. You know, when you put money in the bank owns that money. You don't have access to that money. If the bank says that they want the money, they have the right to take that money. We've seen that time and time again. We saw it obviously with Forex with the SWIFT system being shut down, you know, with Iran. We saw the PayPal being shut down for Julian Assange and WikiLeaks. You know, they can shut down these systems at any time they want for political reasons. But with Bitcoin, they don't have the ability to do that. That's why Jamie Dimon and Wall Street is so freaking out. They're out there saying Bitcoin's a fraud, Bitcoin's horrible. You know, you have to understand that if it were possible, this is the second part of your question, if it were possible for Wall Street to quietly manipulate the price of Bitcoin down or to quietly take control of Bitcoin, we wouldn't be hearing from Jamie Dimon. He wouldn't be screeching the top of his lungs, this is a fraud. It's amusing that it's come to this, where this most powerful banker on Wall Street is reduced to shouting on the street corner, about the evils of Bitcoin. He sounds like some tin pot street corner Jesus, Bible thumper, because the evils of Bitcoin. Because all the stuff that he grew up doing, his whole business model and his wealth has been entirely built on extraction, illegal extraction, rentier, and every other underhanded Ponzi scheme, dollar inflating, political, game possible. And now he's reached the end. So that's the answer to the second part of the question is, I think it would be resistant. It's resistant. Bitcoin is resistant to the type of games that we've seen Wall Street play with the money.
Max, you're awesome. Thank you for your news and analysis. Check out more from Max. The link to his YouTube channel will be in the description below. And of course, I want to thank all you amazing, beautiful human beings for watching, subscribing, and staying tuned to real independent media. Love you guys.